In this video, we will look at the rising window pattern. Fairly simple pattern to understand. This is a daily time frame chart of Britannia, the biscuits company. So as you can see here, this is a rising window between the high of this candle and the low or the open of this candle. There is a gap. In Western technical analysis, this is called as a gap. But in Eastern technical analysis, that is Japanese candlesticks terminology, it is called as a window, and the window gets closed only when in subsequent price action the market closes below this line, the lower line of the window. That's when the window gets closed. Now there are certain characteristics of a window. First, it's a continuation pattern, not a reversal pattern. Generally reversal, most candlestick patterns are reversal patterns wherein the price changes direction or the market goes sideways after the pattern. But continuation means after the pattern occurs, the market continues in the same direction that it was earlier. So in this case, the market seems to be ascending. After this rising window, you can expect the market to go up even further. That's called as a continuation. Okay, continuation trades are less risky trades, but for continuation trades, the reward to risk sometimes might be low. So that's a trade-off. You can sacrifice on the reward to risk, but the probability that the trade will work out in your favor is very high. So the characteristics of the rising window are as follows. Every window has got two lines, the upper line and the lower line. So this is a rising window. So a rising window becomes support. So this entire zone becomes support. So if the price comes down, it might bounce from the support area. Out of the upper line and the lower line is a very strong support. So if the price closes below the upper line, it doesn't make much of a difference. But if the price closes below the lower line, that's called as the break of a window. Okay, so as long as the price closes within the window is not yet closed. Okay, the window is still support. Okay, so generally what happens is when you see a window like this, you take a trade at the close of the window, because this is the close of the window. This is the candle that completes the or confirms the window. So you take a trade at the entry of that candle, and since this is support, ideally you should keep the stop loss below this lower line or below the low of the first candle of the window. Every window has two candles, right? So you can take the low of this candle and the close of this candle. So that's the entry, that's the stop loss. So as you can see, the distance between the entry and the stop loss is very high. So your reward to risk ratio goes out of the window. But this doesn't happen all the time. Sometimes you might have two very small candles and a very small window. So your reward to risk ratio is still high even if you are getting into a continuation pattern. So that's a brief discussion that I wanted to do on rising window. There is much more to this. You can go to this link. There you will find the Japanese candlesticks trading mastery program, which is a world-class program which I have created for you. It has multiple levels of training. It has more than 1000 chart examples. Students from more than 170 countries have already enrolled in that program. I think it has around 32,000 students in the program as of this recording. So please have a look at that. Go to level 2. In level 2, you will find a discussion on windows. Then in level 14, I guess, I have an entire course dedicated just to discuss the windows. Okay, because it is such a powerful candlestick pattern. One of the most powerful candlestick patterns is the window, because it is very difficult to break the window. If the candle closes below this low line, that's extremely bearish, because the window's support is very strong. Anyways, go to that link and get a good grip on what the window is all about. There is a rising window and there is a falling window as well, which we will discuss in some other video. So as you can see here, the price consolidated for a while but continued in the direction that it was previously. That's called a continuation. So even though the reward to risk ratio on this trade was very poor, but still at least your view was correct. You at least knew the probability that the market will go up is very high. Okay, so it is all a game of probabilities. You have to put the odds in your favor before you take the trade, because nobody knows what will happen in the market. So that's the discussion on rising window for you. Learn the pattern correctly. There is an ideal version of the rising window. There is also a variation of a rising window. This is more of a variation of a rising window because the reward to risk ratio is very poor here. But there are cases where you have an ideal rising window. There is a small candle, then you have a gap, then you have a small. This is an ideal version. Okay, so that's the window for you. You keep your entry here, keep your stop loss here. So that window acts as a protection for you. The price doesn't fall to your stop loss. It might test the window, but it might not fall to your stop loss. So you have a degree of protection there. So the price might retrace back, test the window, and then start to go up. That's a very high reward to risk trade, and that too on a continuation pattern. So that's a double bonus for you. So I call these things as ideal versions. Here you have a variation, although it is a clear rising window, but I still call it as a variation because you really can't take a trade here, right? It's too much to risk.